Hi, Binary Options traders. My name is AJ. I'm a regular contributor over in the Happy Forexer YouTube channel, which is a great channel. You should definitely be subscribed. You should definitely like it, and you should keep watching. In fact, you should select, if you have the chance, go up to the subscribe option. Make sure you get emails basically that'll bounce directly to your email and tell you whenever a new video's out. So that way you can get right in on what's happening on the day. So today I'm going to be talking about two binary options trades I took today on the 22nd of May 2012. And so basically they were 60-second options. So they're not the traditional options I usually take. I usually take 15-minute expiries, which I like because they give me enough time to gauge the trends or what's happening on the market. Instead, today I decided to try something new. I had dabbled a little bit before but lost money, but today seems to be a little bit more of a success thing. So I'm going to talk about how I achieved some success with 60-second options, and you can take it or leave it as you like. So basically right here, as you can see, the price was falling off on the Euro USD. This is a 1 minute chart. So it's falling down here, and then it begins to channel. Basically, I also saw that it had dropped below this Fibonacci pivot line that had been plotted using the wonderful Fibonacci pivot indicator. And so I figured that it was probably going to go back up because it always likes to try and retrace. Whoops, sorry about that. Let's go back. There we go. So price always tries to, move back. The buyers were trying to regain the confidence that they had over here, but it was already in a downtrending market. So when it broke this level, obviously it's a pivot level, so they would want to bring it back up. So I watched, and I saw that it was going to go back up. But usually what happens is in these cases is that the price sinks back down to the original level that it fallen to. So as you can see, I'd drawn this support line right over here at this wick, and of course it had hit over here. So what I did is when it reached this point and it went to a red candle, I put a put option. And so it was a 1 minute put option, which obviously, as you can see, was a good bet, and basically I profited from that. But then again, when I saw that it had hit this line, I waited for it to turn green, and then I basically put a call option. Now, as you can see, I could have done it again over here, but I don't like to press my luck too much. It's not a good idea to, you don't know how, especially on a 1 minute chart, it's super volatile, and perhaps on a higher time frame you would have a much better shot at doing this, but of course that would involve more expiries, higher expiries rather than small expiries. So that's pretty much how my technique worked. I hope you enjoyed it. As you can see, it's also pointed out on the stochastic meter right over here. You can see how it dropped off and then it slowly rose. And the stochastic, the way I set it up is that it's a little bit of well, indicators in general are lagging, but this one was, I made it so that way it's a lot slower than, well, not too much slower, but slower than my RSI. My RSI is only 4 periods, while this is like 13 periods. So as you can see, the RSI clearly reacted very quickly to the drop and then rose back up, but the stochastic is what I used to confirm that this was going to go back up. So don't be afraid to throw on indicators onto your charts, but try not to keep it too cluttered. If you do have it cluttered, make sure you can look at it within 2 seconds. You should be able to figure out what's going on in the chart. If you look at a chart and you have no idea what's going on after 2 seconds, that's not a good chart. You should clean it up. In fact, go back to a basic chart. That way you can do it. If you're wondering what these other lines are, these are moving averages. I have one moving average at 50. All three of these are exponential moving averages. I find they're a little more accurate. This one is a 14 moving average, and the last one is a 6 moving average. So usually this is also a great indicator of when the trend is going to change. So obviously if the blue line is lower than the yellow line, it's in a downtrend. But if it crosses over, then we know we're going back into an uptrend. So as you can see here, over here in this end, there was a little bit of an effort to try and bring it back up to an uptrend, but it eventually fell down. So that's pretty much it for this video. It's the first time, so don't hate on me too much, but hope you enjoyed it, and hope you learned something, and if you didn't, thanks for watching anyway.